Welcome to the Deep Dive. We're here to cut through the noise, get you up to speed quickly on the big market shifts.
That's right.
And today, we're diving into something pretty specific. The recent surge in U.S. spot Ethereum ETFs.
Yep, the ETFs. Big news.
And specifically, how that activity immediately seemed to hit ETH's price.
A very direct link, it seems.
So, our mission really is just to unpack the numbers we've seen from our sources, try and figure out what these moves actually mean for, the whole digital asset space.
Giving you the key takeaways without all the fluff.
Exactly. And right off the bat, here's the really interesting bit, I think.
Okay.
Our sources are showing that just in the days leading up to August 14th,
Yeah.
U.S. spot Ethereum ETFs pulled in, get this, over $2.3 billion in inflows.
Wow. Okay, 2.3 billion. That's a serious number.
It really is. And seeing that, it just made us think, okay, how fast does that kind of money actually, move the needle in the market?
Well, and that's the striking part, isn't it? It's not just the amount, though that's huge.
Right. It's the consequence, how direct and quick it was.
Okay, so what did the data show?
The data suggests these inflows, this $2.3 billion, it directly contributed to about roughly 16% gains in ETH's price.
16%. Just from that.
In a really short period, yeah. I mean, for anyone who's been tracking crypto for a while, seeing that kind of almost immediate reaction from one specific catalyst, especially a traditional finance one like an ETF.
Yeah, an institutional one.
Exactly.
Yeah.
It sort of points to a different level of market maturity, maybe?
Yeah.
Or at least interconnectedness, something we haven't really seen quite like this before.
That's a really powerful example. So for you listening, if you're already trying to get a handle on these markets, it makes you ask, right? What does this instant cause and effect? What does it actually tell us about the pulse of digital assets right now?
Well, it tells us these vehicles matter a lot.
Because these aren't just any ETFs. We keep saying spot ETFs.
And that's the crucial distinction.
Yes.
They give investors, like institutions, a regulated way to hold actual Ethereum.
That's it. Direct exposure to the asset's price in real time. It's not like the futures-based products we had before. Different ballgame.
So it's not just betting on the price, it's actually influencing the underlying asset supply and demand.
Precisely. That's why this distinction is so key. What we're seeing isn't just, impressive volume figures and a quick price jump.
Right.
It's more like a real-world demonstration of how these new regulated structures are actually reshaping the market dynamics.
So that $2.3 billion, right? It's not just a number on a page.
Not at all. When you see that much flow into one specific asset class so quickly, I mean, think about traditional ETF launches.
Yeah, some of the big ones take time to gather that kind of momentum.
Exactly. This amount puts it right up there with major launches, but it happened incredibly fast for crypto. It just highlights the speed and the sheer scale with which institutional money can now directly impact the value of something like ETH.
Okay, so let's zoom out then. We're summarizing the core finding here.
Yeah.
We saw huge inflows into these new Ethereum ETFs, over $2 billion.
Massive inflow.
And almost immediately, a really noticeable jump in ETH's price, around 16%.
Yeah. It's not just a correlation. It feels like a pretty clear demonstration, right?
Yeah.
Market dynamics driven by these specific new investment vehicles.
It seems pretty clear-cut in this case.
Exactly. And look, you can't always guarantee such a neat cause and effect in markets, obviously.
Of course not. Markets are complex.
But when you do see it this clearly, it offers really valuable insight. It just powerfully underscores the impact that traditional finance products can now have.
On what used to be seen as maybe a separate digital asset world.
Right. A nascent market, people called it. Now you have these regulated bridges. And this raises, I think, a really important thought for you, the listener, to maybe chew on.
Okay, what's that?
Well, how might this specific example, these big ETF inflows driving ETH's price, how might that foreshadow broader trends?
You mean for how traditional finance products could shape crypto markets going forward?
Exactly. What larger questions does this kind of rapid integration raise? Think about market maturity, liquidity, investor access.
Yeah, does it change who can participate and how?
Precisely. And could that fundamentally alter how we all interact with and maybe even value digital assets in the future? It's something to think about.